Welcome and happy Friday. It's the Fiscal Philosophy YouTube channel, and today it's the Walt Disney Company. Those of you that have a keen eye probably noticed behind me this X-Men 97 poster, so it's fitting that I would talk about their creator, the Walt Disney Company. Of course, I don't mean that they created the X-Men, but I do mean that Disney Plus put out X-Men 97. It's a continuation of the early 90s X-Men, the animated series, which I believe had its final season, its fifth season in 1996. And they call this X-Men 97 because this is basically sort of a what if they never stopped producing the show and gave you a new season in 1997. So it's cool. And Disney Plus, of course, is part of the conversation around Disney. So let's get into why I got into this in the first place. It certainly wasn't for the yield, but I am sort of happy that they reinitiated their dividend to a small level, because I think that does sort of signal to the market that we're back, because they were a dividend payer before the pandemic kind of put a squash on dividend for a while. And, at the moment, they're starting out with it pretty slow. Although at where prices have been the last few months, I would have rather them put the money towards a buyback. I think that would have been a better shareholder-friendly play. But I know that with a older company like Dividend or like Disney, people like to see a dividend. They like to see these dinosaur companies paying out some of their money to shareholders. So there you go. And maybe it's like a sign that the stability is coming back and the rest of it. Weirdly enough, it also seems like analysts are pretty bullish on Disney on the whole. Actually, I don't think that the high target of 147 is necessarily insane. Disney not too long ago it was 2021. They were darn near touching 200. They were like 197 or something like that. And with the business actually really improving and the stability coming back and everything else, I could see where people think it could get back to those, maybe not quite to those levels, but to a level that's within striking distance of those levels, we'll say. Although I do think maybe something somewhere in the middle is probably actually more likely. Time, of course, will tell, and I think it depends on a few things that happen throughout this year on their earnings. So this is a company that was heavily impacted by the pandemic. Their parks and cruises both just took a massive hit, which, of course, has taken them some time to recover from. And even as revenue recovered, profitability came back a little bit more slowly. And here we have, just a company that's starting to get its mojo back a little bit financially. And so we have revenue that has recovered very nicely over the last couple years. But even more beautiful than that, of course, is their free cash flow, which I would say the last, half dozen or so quarters have shown us that indeed they are back to generating free cash flow on a consistent basis, and it seems to be getting better, which is, as an investor, of course, you want to see more and more free cash flow. Means more and more opportunities for them to return value to you, the shareholders. Let's talk a little bit now about some things that I don't like, since we have mostly been talking about positives up to this point. First and foremost, on the balance sheet, you've got a considerable amount of debt. They have some cash too, but when you net them together, it's still $43.5 billion net debt. So while leverage is normal in this industry, I don't have to sit here and like it, okay? So there's that. And then there's also the fact that Disney has not managed to remain sort of above the fray and like apolitical a lot in the last little bit. I've heard numerous times over the past couple years that different things that they've put out content-wise have been more or less trying to check like a bunch of different boxes for virtue signal points rather than just focusing on, putting out high quality content with good stories and likable characters. That's actually what Disney is supposed to do and what they do best when they're firing on all cylinders, so to speak. So my hope is that it gets really back to that as the focus. Don't worry about checking the boxes. If your story calls for a specific type of character or whatever, don't hesitate to put it in, but like don't try to like force. I think people can like sense when you're just forcing something in for the points, for the look at how inclusive I am points, versus like making it like an actual genuine story that means something. So like basically don't condescend to your audience, I think is what I'm getting at with that. Let me know in the comments below if you agree with that assessment. And finally, I want to talk a little bit about valuation. It's tough, right? They are definitely showing signs that they've recovered and everything like that. This is certainly something I would call a wide moat. And hey, their price to free cash flow is currently in the low 20s. Forward PE right around 20. And I do think that with streaming turning profitable now, there is definitely room for cash flow and earnings to grow at a considerable rate in that segment. And if they cut the fat and cut the distractions and just, again, get really actually firing on all cylinders, their profitability can be a lot higher, even with limited revenue growth. Like, I don't think they can have infinite revenue growth forever. They can probably squeeze some more top line out of Disney Plus and Hulu and all their different streaming bundles and things that they have. But you can only squeeze so much there. It's more about getting the efficiency, getting the cost effectiveness of that revenue really maximized so that more and more of it hits the bottom line. And I believe Disney can do that and is showing that they can do that with how it's been trending the last few quarters. They just need to get the rest of the way there. And I think this is going to be a slam dunk, maybe not a 10x or anything, but a slam dunk nonetheless, a pretty solid return. And also, I just think that downside on this, there's a lot less downside on this than a lot of other things I could be in. So there's that too. I think there is a considerable amount of upside, and downside is a lot less than what the possible upside is from my perspective. If you made it to the end, I'd like to thank you very much. Be sure to like and subscribe. It helps me out in the algorithm. Be sure to leave your input on Disney in the comments below. Also, my Discord is linked in the description. I may change how I allow access on there. I will not charge for it, but I may add some step as a layer of protection so that the people I have in there aren't subject to spammers and scammers anymore. Also, catch me every Saturday, 8 p.m. Eastern, Cash Flow King live, and follow me on the X platform at Mr. Macho Mog. Take it easy, everyone, and have a wonderful day.